Hey guys, let's take a look at some charts on Monero, the latest article for Brave New Coin. So I usually like to compare all the like coins just to see how they stack up against each other. Even though as a group, the chains themselves are very different. You know, you have hybrid proof of work, proof of stake, and Dash. Monero is pure proof of work. Zcash is pure proof of work. DCR is a mixture of proof of work, proof of stake. I think Pivx is a mixture of proof of work, proof of stake. Grin is fairly new to the scene. It's got super high inflation. It's pure proof of work. So all the individual characteristics for these coins is sort of going to alter what the metrics look like. For instance, Dash uses a coin mixing type service, which explains the extremely high transactions per day, just because I think each mix is counted in the transaction grouping there. And the same thing with daily active addresses. Dash likely benefits from the coin mixing stuff there. Zeke's total daily transaction volume, Zcash, has always been extremely high. I have no idea why. It doesn't make any sense to me at all. I can't explain it. So if somebody knows, let me know in the comments. You can see Monero basically leading or second in anything that you can actually see a metric on. So for Monero and Grin, you can't see total daily transaction volume and you can't see the active addresses. Monero uses a similar type of mixing for the anonymity or privacy aspect. So my guess is Monero's active addresses are extremely high as well based on that. And then GitHub commits, I don't really know what's going on with Pivx, honestly, but clearly they're leading in the dev stuff, even though the market cap and just usage of the chain is kind of nothing compared to all the other, it's less than 1% compared to all the other chains. So looking at Monero's hash rate and difficulty, they recently switched in November to a brand new algorithm that has never been used by any other chain to sort of push off all the ASICs again. So they've done that a couple times now. Here's just slightly altering the algorithm, and then here's just changing entirely. So these hashes, even though it looks like it's at an all-time high, it's a different algorithm, so you can't compare, it's like apples to forks. You can't compare the two. They're just completely different. This type of hash is more than this type of hash, just at face value. So this should be higher at all times, just based on that. Random X. Looking at the mining network and the mining pools, again, two pools have over 50% of the hash rate, over 51% of the hash rate. Something like these four have like 80% of the hash rate. If this were BTC, there would be riots in the streets about moving pools and increasing decentralization. I don't really see that with Monero. I'm not super connected in that community, so maybe there's a push for that. It certainly was better than it was a month ago. It was even more concentrated a month ago. But what you really want to see is the small pools increasing, the unknowns increasing, the support Monero or support XMR, mine XMR pools. There must be an incentive as far as fees or pool share or something, reward share, to keep this slice so big. Just looking at the Monero inflation and Bitcoin inflation, you can see we're somewhere around here. So right now Monero's inflation is actually lower than BTC. As we approach mid 2020, it'll be slightly lower, and then BTC will take over again. So they're about even. It's about 1.8 to 2.5% for both before and after the halving for BTC and the continued drift downward for Monero. So looking at the transactions per day, which is the line, and network difficulty again, which are these fills and peaks here. My general thought was that with the rise in difficulty, you get a rise in mining stuff. So that sort of precedes the transactions. So the transactions will pop after the mining difficulty pops, partially, in my opinion, because of things like malware, botnets, ransomware, that sort of thing. I think that's part of it. I don't think that's the whole story, but I think it's part of it. So I expect the transactions per day to actually exceed the all-time high fairly soon here on Monero. There's probably more people mining, which is also playing a role here. So with the new algorithm, CPU mining, I believe, is the most efficient, along with GPU mining, and then ASIC mining is a distant third. Looking at technicals, the open interest for Bitfinex at the top here, VPVR, volume profile of the visible range, RSI on the bottom, which is just an oscillator, helps you figure out oversold, overbought conditions, and the 50 and the 200 EMA, green and red here. So you can see that in general, open interest for Monero has just dwindled to sort of nothing. Notionally, this is a very small amount compared to other pairs. Shorts here are basically non-existent. Longs have continued to come off since mid last year. So it's hard to know if this open interest has any bearing on price whatsoever. Most likely not, but there's so little of it. Makes you wonder who's actually trading the Monero pair on Bitfinex specifically. Looking at the 50 and the 200, just like everything else, it bear crossed on the March 12th drop, broke the VPVR zone, just like every other coin, and now it's sort of pulling back up. It actually hit 25, which is a multi-year low on a wick, and you can see just how significant RSI got here on the oversold conditions. It's just the second lowest RSI on record, so it got extremely bearish very quickly and sort of rubber banded back to the mean, or trying to at least. So I expect it to just consolidate in and around 40 to 60 for the next foreseeable future 100 days, something like that. You know, similar to this ascending triangle, similar to kind of this just downward drift. It's going to bop around here and chop everybody up if you're trading it, but I think it's a decent zone as far as a buy support is considered. Looking at the cloud, obviously very bearish below the cloud. Cloud is bearish. It's going to try to return to the 62 zone in the next 100 days, most likely, so long as we don't get lower lows. And if you do get a lower low, what you're looking for is a higher low in RSI. It's extremely unlikely that if we do get a lower low, RSI will also be lower, which means you'll have an automatic bullish divergence there. Now, divergences can continue for months and months and months, for years even. If you look at US oil chart, there was a divergence that eventually played out that took years. So keep that in mind when you're looking at divergences. But if this does get a lower low, you're going to get a divergence bullish here, which says that there's weakening bearish momentum. It's very unlikely to get another drop that's significant. So that at that point, I'd be comfortable catching knives, as they say, just buying the low on spot, for example, not on leverage, but with 62 being the eventual mean reversion point. And then looking at Monero BTC, again, cloud, EMAs, VPVR, RSI, you can see what we have here is a hidden bullish divergence. So you're getting a lower low in RSI. You're getting lower momentum from previous periods. Even with, higher momentum. With higher momentum, you get a higher low in price. So that says despite being ultra bearish, it didn't make a lower low. That's why it's a hidden bullish divergence. In your head, it's really easy to confuse these because you don't see them too often, but definitely bullish divergence there. So similar to the USD pair, it's got this massive VPVR just range, and you can see where that's come from. I mean, we've been in this range for this pair since July last year. So it's going to need to break highs to have a chance at not continuing to chop around in this zone, anywhere from 0067 to 0095. It's just going to continually chop around in here. And then the ultimate price boss is 0.01. It's got to break that. It's a significant psychological resistance level and a significant VPVR volume resistance level.